explaining Kefron AP's e-invoicing module. This module is designed to deliver e-invoicing and tax compliance in one global solution. Now, to understand some of the core concepts of e-invoicing, we need to first understand the challenge that governments are trying to address. The main challenge that governments are trying to address is what we call the VAT gap. Now, the VAT gap is the difference between what is owed to the government and is what is actually collected each year. It's estimated by the European Union that the VAT gap was approximately €93 billion each year. So again, that's a major deficit in terms of what's actually collected by the government and what's owed. So it's important we compare the today or as is process versus the to be process moving forward with the introduction of CCC legislation. And we'll come on to exactly what that means on the next slide. So traditionally, tax authorities have relied on businesses to report on VAT liabilities in arrears, on monthly, bi-monthly, or quarterly intervals. Moving forward with the introduction of e-invoicing mandates and legislations, governments are introducing new regulations to monitor business activity in real time or near real time basis. The second step change is typically there's no process for businesses to submit directly to a tax authority during a sales or purchase process. Now, moving forward, invoices must be submitted to the tax authority portal for approval by that tax authority. There's no mandate or format for submitting documentation to tax authorities today, but moving forward, there will be specific formats in place for issuing and receiving electronic invoices via tax authority portals, which causes a major challenge from a technological landscape to introduce that moving forward. I think it's important that we understand some of the key acronyms that are associated with e-invoicing. So I'm going to try and unpick them as best we can. The CTC ultimately stands for the Continuous Transaction Control, which is the ultimate in tax authority controls. And as we discussed, instead of sending VAT returns on a quarterly basis, all invoices must be submitted to the tax authority in a real-time or near real-time basis. There's two main flavors of e-invoicing. One is the CTC clearance, and CTC clearance ultimately means, again, that the tax authority must approve the invoice. So the invoices must be approved using a digital stamp or signature before it can be sent to the buyer. If it's not approved, it will be rejected and sent back to the buyer. CTC reporting means invoices don't need pre-approval. However, it does mean that invoices need to be reported in a real-time or near real-time basis, or if agreed, after a fixed period from issuance, so 1 to 2 days. So you can see how the legislation is really honing in on the time to report on these e-invoices being submitted. And lastly, the term e-invoice. For most of us, an e-invoice will be a system-generated PDF document from our ERP system or accounting software. Unfortunately, e-invoices in the CTC model relates to a structured file format, and the file format is going to be different depending on the tax authority or country that you're operating in. So again, that's going to cause a little bit more technological complexity. A lot of customers are keen to understand how e-invoicing works, and we're going to do our best using this graphic to explain how a typical accounts payable e-invoicing process works. So if we take it from left to right, you can see the supplier generates the e-invoice. Now, as we discussed, the e-invoicing format is going to vary depending on the country and the tax authority. So the file format may be an XML or a different file format depending on the country. The first thing that needs to happen is the e-invoicing needs to be submitted directly to the tax authority for clearance. If the tax authority rejects the document because of inconsistency in the file format, it will be rejected back to the supplier. Once received by the tax authority is going to assign a unique ID, and it's also going to let the supplier know that the official confirmation has been received. If you've got an AP automation tool, the tax authority is going to accept the document from that AP tool. It's going to go through a workflow. So for your non-purchase order invoices, it'll go through coding and approval, for example, in the Kefron platform. And for your purchase order and receipt note invoices, that's going to go through a matching process in the Kefron AP platform. So in this case, Kefron AP is linking from the tax authority to the supplier and ultimately to the buyer. Once it goes through your workflow, the invoice is then going to be available for retrieval or download. So again, Once it comes out of the Kefron AP platform, it's going to be sent to that buyer directly into their ERP system for a payment. This hopefully gives you a brief overview of how the CTC mandate is going to work from a headline overview point of view in an accounts payable process. Key things to unpick: the e-invoice is going to be in a specific file format. It needs to go for clearance from the tax authority via an API. The tax authority is going to assign a unique ID or reject it if it's not in the correct format. And then it's going to be made available for the buyer to accept and ultimately pay. Next, we're going to talk a little bit about how CTC is accelerating. So as you can see on screen, from 2020 onwards, there's been a rapid acceleration of the introduction of e-invoicing legislation, as well as the CTC. You can see right now, for 2022 and beyond, these countries are in scope and have specific legislation associated with them, along with specific deadlines. And that's the really, really difficult thing for customers to understand and track from a compliance perspective. When does the deadline impact my business? So when do I need to be CTC ready, in other words? If you found this video useful, please do let us know. We'd love to book a short discovery call so you can stay ahead. We want you to understand the future e-invoicing legislation is going to have on your business and the impact that potentially we're all facing in trying to address those challenges.